When insiders are selling, outsiders should pay attention. Although there is often a spin on the information, as in there isn't a worry because stocks always go up in value, instead people should be paying close attention. We must take this information, as we do with all others, with a grain of salt. It's not a clear indication of sell signal, it's not completely obvious, but it is important. When we see the executive herd rushing for the exits, a bell should be ringing in your ears. You came here for the truth, so let me unveil that for you. Today we're going to look at insiders selling stocks. I think it's important to watch what they're doing, and we can absolutely do so. I'm going to show you exactly how that's done. Let's get into this right away. Two things. I made a video recently about insiders selling stocks. I'm going to briefly touch on that now. And I also posted something in the community or blog section of my channel to describe certain events that have happened recently. We'll cover that as well. The leaders of corporate America are cashing in their chips as doubts grow about the sustainability of the longest bull market in American history. Corporate insiders have sold an average of $600 million of stock per day in August. August is on track to be the 5th month of the year in which insider selling tops $10 billion. Guess what? Last time it happened? 2007. People need to be aware of what's happening here because the insiders know what's up. They know that this bull market has been extended very far. We are seeing the China-US trade tensions. We're seeing the economy stagnating, slowing down, or contracting depending on where you're looking. All of this information is very obvious to those who are paying attention. Now, if you want to pay attention on your own, I'm going to show you exactly how to do that. Apple CEO Tim Cook sells millions in Apple stock. This is important, but don't take Barron's word for it. You can find this information on your own. I'll show you how. But before we get into that, I want to say something. Just because Tim Cook, Warren Buffett, Mark Zuckerberg, anyone else, just because they sell some stock does not mean that they have completely lost confidence in their company. No, that's not the way it works. It can be an indication of that, but does not necessarily mean that's the case. You have Jeff Bezos, for instance. Maybe he had to sell a whole bunch of shares because of his divorce. Maybe he's selling $1 billion worth of stock because he needs to fund Blue Origin, which he does. This is important to be aware of. But when you see the pattern getting disrupted, for example, if Jeff Bezos was selling $1 billion worth of Amazon stock a year, and then the next year he sells $5 billion, well, that is a pattern disruption. What exactly is he doing with that money? Of course, you have a guy like Bezos or maybe Zuckerberg that are heavily invested. A lot of their net worth is within that company. Are they going to sell 99% of their stock tomorrow if they thought the market was going to come down? That would be extremely terrible for him because it would destroy confidence in the company. Investors would see that information and they would freak out. So we have to look at this on multiple levels, and we will look into that further. Of course, there's always going to be new information that pops up, and I will bring anything relevant to you. Open Insider is a website that takes the publicly available SEC Form 4 and puts it all together in their database, which you can search from. I think it's so important to see this website. Number one, it's free and you can actually do your own due diligence. Like I said, don't believe Barron's, don't believe me, look into it for yourself. I always give my subscribers the resources that they need simply because I'm not a know-it-all. I'm a student. I'm a student of history, and I am a student of all the data that comes out every day, and I want to know that information, and then I want to pass that on to you. Take a look at this example here. You can see on this website, left-hand side, tickers, AAPL, insider Tim Cook. You can see that the insider title here, selected CEO, filing date within the last 6 months, and we have one line that came up Tim Cook right here, the CEO of Apple, selling off a whole bunch of shares. $55 million worth. Now you might be thinking, is that a lot of money? I mean, if Zuckerberg sold $55 million worth of his company, is that really significant? Not in his case, but in Tim Cook's case, it actually is. 24% of his shares, in fact. That's pretty big. Now, part of this, of course, in fact, in many cases, is because a lot of these individuals get paid not just with their salary, but they also get paid in these shares, in options. And of course, they exercise those options. They are taking that, and maybe they need to buy a boat, maybe they're buying a house, maybe they have a lifestyle that is more extravagant than their salary. So they're constantly exercising these options, taking the money out to be able to pay for their life. None of my business, whatever they want to do, but we have to pay attention to the patterns. This right here, of course, is above and beyond that. Now, if we see that Tim Cook is riding in the Mediterranean on a new yacht, we may have an idea of exactly where that money went. Up until then, it's anybody's guess. 24% though, that seems like a lot. Now, maybe he thinks that the market is coming down, that Apple shares are probably around the peak somewhere, and now would be a good time to sell. Maybe he's going to park his money somewhere else, take that $55 million. Maybe he wants to buy some real estate. Maybe he's getting into something else altogether. Nobody really knows, but I can tell you right now, this seems very interesting. So I thought I would look a little deeper. From Open Insider, what I did was I searched the filing date within the last 6 months and then organized by value. I simply wanted to see who is moving what at this time. A lot of these companies are not going to be familiar to many people, but you can look through for yourself. I mean, we're talking billions of dollars in many of these cases here, and you could just see the different insider, what company that they're selling shares of, and so on. Just look through here. I'm not going to stop on all of these, but you can see some examples. Jeff Bezos selling off $861 million worth. That was on July 31st, okay? Then you look further down. You don't have to go far. $677 million worth. Go a few further down and you are seeing $579 million worth, and it goes on and on. In fact, he did this many times. Now, as I said initially, might be because of his divorce, might be because of Blue Origin, and so on. We don't really know what this is all about. However, he's been selling a lot of shares that go far beyond what he normally would. Okay, so that's just something I wanted to mention. Here you can go further and further and further, and you will see more on your own. I don't have time to actually go through all of this, but there are so many others. Like, for example, Vince McMahon selling off a massive stake in WWE. But all this really does is it leads you down the rabbit hole, because then you can search about this online and maybe there's a story, maybe there's a reason for it, but it's really good information and it's publicly available for everyone to check out. If you want to know exactly how to do this on your own, at the very end of this video, I'm going to link to that video, so definitely stay tuned for that. Not many people have watched that video. I don't think many people care, because the amount of views on that video is so small, and yet the information is there for everybody to learn to be empowered. Let's move on to the next one. Here's another chart that I found that just shows you the stocks with massive insider buying. These are generally smaller companies, but I thought I would just show it here. You can pause the video if you're interested. And then we start to turn the page a little bit. Warren Buffett's Berkshire Hathaway has racked up a record $122 billion in cash. Why exactly is Warren Buffett holding on to this much cash when he could be buying stocks, when he could be buying companies? He hasn't made a significant purchase in a while, and considering that the amount of cash he has right now is a record level for this company, that isn't a good sign. It shows you that he doesn't want to overpay for anything that's available here. Now, remember, Berkshire Hathaway doesn't just purchase shares of companies, they buy entire companies in some cases. He could have had an opportunity. There are many out there, and yet he's waiting. Wait and see. Not buying, not investing, just waiting and seeing what happens. What does that tell you? Is it really an indicator, or is it just Warren Buffett and his own thing? Big Short investor Michael Burry is calling passive investment a bubble. He's not the only finance luminary sounding the alarm. I'm going to show you some quotes from this article here. He's warning about passive investing and saying that the problem is happening because the pillars of passive investing, ETFs, and index-based assets mostly focus on bigger companies. This puts downward pressure on the stocks of smaller companies and has effectively orphaned smaller value type securities globally. It's really an interesting note because this is something I talk about often. There's a big problem that's happening today because of passive investing, and we will find out the true magnitude of the disaster that this has created in the next crisis. We don't really know because historically ETFs were such a small portion of the total back in, let's say, 2007, 2008. This time around, I think there's going to be a big rush for the exits. Liquidity is going to not be there, not be plentiful, that's for sure, and we're going to have some big problems as a result. According to Carl Icahn, passive investing is the bubble right now, and that's a great danger. You need regulation on this stuff. He highlighted triple leverage ETFs that offer triple the returns of the performance of an underlying index, saying they shouldn't be available for purchase. To me, that's crazy. I know there's a lot of people out there who are using leverage in this case, saying, I don't need to worry because stocks always go up. Therefore, I am simply making more money off of my investment. To me, this is crazy. Jeffrey Glundlock said, I wouldn't advise anyone to be a passive investor. My strongest advice is not to invest in passive US equity funds. I think, in fact, that passive investing in robo-advisors are going to exacerbate problems in the market because it's hurting behavior. Thank you, Jeffrey Glundlock, for taking the words out of my mouth. Howard Marks said, might the inclusion and overweighting in ETFs of market darlings, a source of demand that may have driven up their prices, be a source of stronger than average selling pressure on the darlings during a retreat? We won't know until it happens, but it's not hard to imagine the popularity that fueled the growth of ETFs in good times working to their disadvantage in bad times. That's exactly what I said a moment ago. And Jack Bogle, who you may know, he said that I do not believe such a concentration would serve the national interests. You can see that even a company like Vanguard admitting that what is happening today is probably not a good idea. When you have this concentration or the herding effect, you have big problems that eventually occur. But you shouldn't worry, okay? Because according to Benzinga, traders shouldn't necessarily be spooked by reports of massive amounts of insider selling in the stock market. Some of that selling is likely in response to the yield curve inversion earlier this month, but much of it is simply a product of stock prices being near all-time highs and record high executive compensation, much of which is paid in shares of stock. I do agree that this is the way that we are seeing it happening today. A lot of these executives, they get paid in stock. They want to live certain lifestyle. They are selling some of that stock. No doubt about it. But we have a record amount. You can't deny it when you are seeing all of these other factors on top of it. You can't take it as an individual indicator. You need to pile everything up. That's why I always look at this information and I have to laugh. But anyway, I'm going to end the video there. If you found it informative, hit the thumbs up button. To support this channel, you have to click one button. I do appreciate that very much. If you want to learn how to make money, how to build a business, and do that for free, I have an e-course completely free, how to sell on Amazon. I call it the Amazon GPS. If you go over there, you sign up, it's totally free. I teach you everything you need to know step by step, all of that which you need to build a business selling on Amazon, the AmazonGPS.com. If you want the financial education that was not taught to you in school, these two books have everything that you need. Talking about the foundation, the history, the asset classes, tax incentives, reducing your expenses. I got everything in here. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to find out how insiders are buying and selling, all the details of that, I break it down in this video. Click on it and I will see you over there.